All right. You guys should be able to hear me now. Bienvenidos, bienvenidos, bienvenidos. Welcome, welcome, welcome. ¿Me escuchan? Veo a Iris Rodríguez. How are you? ¿Ahora sí se escucha o no se escucha? Can you guys hear me? Hear me, hear me, hear me? Hello, hello, hello. Qué bien, Yesenia. Okay. Let's start. Let's begin. So, we are at the expected move on both the NASDAQ, the ES, the Russell, and the Dow Jones. Estamos en lo que se dice la jugada de la semana. So we're just riding this, right? So if we look at what happened today, let's go here real quick. Let's go look at 15 minutes. Delete. Let's go look at the day. So yesterday we were talking about that if the market tried to go up, we were looking for it to continue down, right? We were looking at the market to do something like, go up and then continue down to the expected move, which it did hit the expected move. And then this morning it actually went past the expected move. So here, what's going on here? Okay, what I want you guys to understand is that the market moves in waves, okay? But it also has trends. So we can draw a quick little trend right here. And pretty much this is what's going on. We broke above the trend, the downtrend in the afternoon, but we're right back below it again. All right, so the market is looking very weak. We should be seeing the market pick up some steam here, right? With all previous buying, previous buying, previous buying, previous buying. And I mean, we should be seeing it trying to go up. However, it's consolidating over here. It's just like up, down, up, down, up, down, up, down, right? It's trying to figure out if it's going to have a big bounce. So when you look at it in different perspectives, I like to use these things called Fibonacci levels. So we clearly have a low, we clearly have a high. When we use Fibonacci retracements, they're called Fibonacci retracements, we can take this low to this high, and we can clearly see that it went from this low to that high, and it's come down to this area right here. So think of this as 0, right? Or it went from 100 to 0, and then it pulled back all the way to what we call the 0.618 or 0.65. We call this here the golden pocket. Golden pocket. All right, here's your golden pocket. What I normally like to do at those golden pockets is draw myself a little zone which highlights the exact point where a big push up, right? When we think of a big push up, let me do this in green. We'll have, let me make this wider so you guys can see. You guys see this? So a big push up, we'll have a pullback. Here was your first pullback to this 0.23 Fibonacci retracement. Try to go back up, came right back down. here's this candle. This candle just went all the way back down here, and then here we are, right? We're bouncing right off this golden pocket. Now, every time we have a low and we have a high, which this is how you should see it, right? Wick of a green candle, wick of a red candle. So we clearly have a low, we clearly have a high. We can draw our Fibonacci from this low to that high. Here is the golden ticket, the golden pocket where we're supposed to go for that bounce, right? Any big push up, we're supposed to go, let it come here and then go for that bounce. If you did not get in at this price to go long, you might be a little too late. We might want it to come back retest to see if it's going to go again. But right now you see the trend line is having a tough time with that trend. So what I told everyone, and I told the students, I said, all right, be patient, wait. This is the low volume time for the market because it's only the 6 p.m. open. The Tokyo session starts in about 10 minutes or so, right? So what I want to see the Tokyo session do, and I can turn that on, right? I have this indicator here. The Tokyo session will start. See, Tokyo session yesterday started at 7 p.m. So the next Tokyo session will start at 7 p.m. I want to see what the Tokyo session does. Will it push it, right? Push it above this downtrend, or will it continue to push it down and below this golden pocket? So the rule is, whenever you're using these Fibonacci retracements, is you can catch a bounce off this golden pocket, right? Which would be a continuation to do what? To do this, right? Down to here, and I'll put this in red, to then see if we can have enough buyers to try to now break above and go here again, right? That's the general idea of the golden pocket. We let it push, we let it pull back, we let it find some buyers, and we let it come back up. Right now, though, we're having trouble with this downtrend. So we have to wait for some volume to come in. And the volume only comes in when we start to see the session start. So the session for Tokyo will start. We'll see how Tokyo behaves to see if it can break that. If it cannot break here, then if it comes down and if it breaks here below, this is your floor. This is your ultimate floor. If we break this golden pocket, my rule is anything below here, right, below the golden pocket, if we break below, then forget it. It's just going to continue to break down here. Maybe catch a bounce here or even back to the golden pocket. Sorry, let me fix this. And then that golden pocket will act like a resistance, which means you should look for a continuation down. Okay. So the idea is any big push on a pullback can actually pull back to here and continue to go, pull back to here, continue to go, pull back to here, continue to go, or the last floor, right? The last floor where it could bounce from, or last support, is this golden pocket to then continue to go. But if at some point it pulls back and it breaks below the golden pocket, then forget it. You lost your uptrend. You're going to continue in this downtrend. You're going to continue to see the market go low, retest, low, retest, and the way it structures. All right. So right now, is there any trade that we can take? No, because you're in a high risk trade. We don't have enough volume to see if this market will break this downtrend and continue to go in the direction we want it to go. But we also don't have enough volume because the sessions have not started. Tokyo session, London session, and the New York session. Normally you want to wait for some good volume, right? The good volume for the Tokyo session last night, even though it started at 7, the Tokyo session, the good volume didn't start till about 9 p.m. to kind of give you a big push down, right? Because it broke below these this close and this open of this candle. So 9 p.m. it actually made everyone wait for that 9 p.m. to go down. London session started here. Again, London session, as soon as it opened, which was at 3 a.m., it started pushing, right? It started pulling back up. Could not break above here. And then it went down, right? So same deal, right? I can give you an example right here with the Fibonacci. You either need a low to a high or a high to a low. So let's draw a Fibonacci right here. I want you guys to see something. See how it came to this golden pocket? So in this scenario, we went from this low, from that high to this low. We bounced up to a golden pocket. And this is the area where everyone should have went for the breakdown again, right? So let me get rid of this so it doesn't confuse you guys. Get rid of this. So from here to here, this bounce, and this bounce went up to what we call the golden pocket, right? This golden pocket. Could not break above, which means the downtrend was going to continue. So here's where you would have wanted to go short. Here, we're looking for the opposite. We're going from low to high. This is where we want to look for a bounce to continue to go up. However, if we have this downtrend and we cannot break this, right, this trend, we have to be patient enough to wait for some volume to see if it's going to break or if it's just not going to be able to do it, come back and break below, retest and go down, right? But here are two perfect examples. One, going from a high point to a low point, golden pocket, which means continue down. Here, it's from a low point to a high point to a golden pocket to see if it continues to go up. Those are the two scenarios, right? So what am I thinking right now for tomorrow, forecasting for tomorrow? I'm thinking we have to wait. I don't want to see if I can throw a trade tonight. I kind of want to let the Tokyo session and the London session decide for us what it wants to do. Tomorrow when we wake up, I want to see if we broke below this golden pocket or we held it and went up. And if we do go up, guess what? Here is your other resistance. The same golden pocket from here is going to be your resistance tonight. So we might be trading in between these levels here. On the ES is 6681 and 6628. So these levels right here will be the levels to watch. We might stay within here, or we might wake up tomorrow lower, or we might wake up tomorrow higher. I just kind of want to let the Tokyo session and the London session kind of give us that stuff, all right? So what we want to do is let this go. I mean, let the night kind of develop and give us a little better with more volume what it's going to do, at least on the ES. If I go to the NASDAQ, which I like to trade the micros, kind of the same deal, kind of stuck in the same place. Again, Fibonacci retracement, I can go from this low to this high. Boom. See the golden pocket? So from a low to a high, it pulled back, looking to see if it's going to bounce here to continue up. And then same deal from this Tokyo high to this Tokyo low. So they're very similar. They're just different prices, right? So bam. So here are your two golden pockets. Those two golden pockets are acting like our supply and demand, or support and resistance. I would be very patient and waiting for more volume to come in to help us guide on what we want to do. Anyone who wants to play this golden pocket here to go long, you could. However, what would I recommend in regards to managing your risk, right? Managing your risk is how you really get ahead in this. So if you're going to manage your risk, I mean, if you're going to go long now, let's say you want to do 2 micros, you can buy right at this point. Where would I put my risk? I would put my risk right under that. Where would I put a target? Official target, I can go to this, what we call an EMA. Or I can actually say, let's see if it comes back up to this golden pocket. So my risk to reward, you can measure it with this as well, right? On a long position. This is my entry long. This is my target. And this is where I want to put my risk. It's a 3.2. So pretty much it's a 1 to 3. For every $1 I'm risking, I'm looking to make $3.22. So this is a 1 to 3 ratio. Now, my risk is 279 on 2 micro contracts to make 900. Okay. That's how you would play this if you're going to say, hey, you know what? I think is going to respect this golden pocket. We're just going to go higher. Anyone trying to go short, I would be very hesitant because we have this golden pocket. Okay. If we didn't have this golden pocket right here, I would say, if we had it above, then I would say, yeah, I mean, you should be going for a short. But right now we are right here. This golden pocket, I would not be looking for any shorts at the moment. But again, there's no volume. Tomorrow we also have, some speakers. Then we have the FOMC minutes tomorrow at 2 p.m. So we do have some news that, can actually move this market tomorrow. But again, most of that happens around 2. Okay. But be careful, be very careful whenever you get into trades that don't have volume yet. And at the same time, you're waiting for sessions to start. All right. So forecasting for tomorrow, we might be staying here, but I'd rather wait to see what happens during the Tokyo, the London, and then, operate in the New York session where we have more volume and we can take advantage of more like things. So right here, 7 p.m., right? Tokyo just started. I want to see what Tokyo starts to do, see if it respects this golden pocket to go up. And if it does, then, we would stay in this long. Anyone who's looking at this long trade, I mean, that's it. You're using the golden pocket as that. Hey, from this floor, I'm looking for this thing to go up. And if it does break this solid buyer, right? Solid buying zone, then that's exactly where I want to get out because I do not want to take this ride down all the way down to here. That's too much. Too much risk. It's almost a 1-to-1, but still, $840 is too much. You want to put it where it makes sense. Your risk versus your reward always has to make sense. Okay? That's it. That's what I had for my review in regards to what I saw today in the market and where I can see maybe the forecast telling us where the market wants to go. We are seeing that the sell-off that has been happening, right, is starting to find some footing, find some ground. We are at an expected level. So if we continue to do lower low, higher high, and this becomes a higher low and it starts to structure up, this could be where the market's trying to go, right? Forecasting what? Futures is exactly that, forecasting long. Forecasting where we think the market's going to go. I have a solid floor here. I have a solid higher low, and I have a solid risk where I know my risk versus my reward. Cool. I hope you guys enjoyed this live. I am about to go do my private Zooms with my team. So anyone interested, I always leave the link below. Okay. See you again tomorrow. Peace.